Perfect. Welcome back, everybody. SF Live, episode number 36. After a quick restart here, we had some technical issues. We're all live. We got everybody joining us today. We got David Finch. He's the CEO of IXIOS Asset Management. We got Rob McLeod, the CEO of Blackwolf Copper and Gold. And we got Luc Ten Have, mining investor. He's probably the best retail mining investor that I know, that most of you guys know on Twitter and on CEO.ca. So I'm really excited to have you guys all on. And most importantly, you're all very active on Twitter. 2 weeks ago, we had Duncan from Westdome. I don't think the guy has a single social media account. So, I'm quite
it's an Instagram account, and he still hasn't figured out how to set up his avatar yet. So he's a very good mining engineer and CEO, but enough with social media.
No, exactly. So, but I'm really excited because this is a true Fintwit panel. I'm excited to have everybody on. We got so many pressing topics to talk about. Just to give our listeners a bit of an outset, what we're going to talk about. The format's supposed to be 45 to 50 minutes, depending on how many questions we also get. We got some pressing matters we need to talk about. Obviously, like how is COVID affecting our whole industry? We live and die by the gold price as well, so we're going to talk about that. But we're not macroeconomists, so we're going to talk about more how is the current price level affecting what's going on in our junior mining and junior exploration sector. And then we're going to answer some questions as well from the audience as well. We'll get to that using hashtag #AskUs. I hope there's not too much competition on Twitter for Ask Us, so just fire away and we'll get to those at the end. I'm going to start on the top. I'm going to move my finger the proper way. On the top here, David Finch. Please, I wanted to introduce you first, but I think it's way better if you introduce yourself real first, introduce your fund real quick, and then we'll dive into more detail about COVID and everything else.
Paris, I work for IXIOS, which is a subsidiary of a BNP Paribas. We run a specialist gold and silver mining fund. It's a relatively small fund, about $130 million US, of flexibility to invest in some smaller situations. We have about 60 to 65% of the fund invested in GDX names and about 35% invested in developers, smaller producers, and even a couple of service companies. So it's a flexible fund, and we try and alpha as we can versus our benchmark, which is the GDX.
Fantastic. And Rob, since we're going clockwise, you're next up.
Yeah, so I'm an exploration geologist by training, originally from Stewart, BC, about 25 or so years of experience, and just about to launch the company. This is after IBM Mining was acquired by Ascot Gold last year. I still do some consulting for them, and I'm an independent director for and Gold Standard Ventures, and I'm here with Brando the Beach. So if many of you follow my, I probably post more about dogs than I do. Sometimes they're both.
Oh, that's why we got you on. Like, we don't want to hear anything else about than the dogs. So, no, and look, just give us a quick update. Like, what does your day to day look like? Like, you're as I said before, you're one of the best or most diligent retail mining investors that I know. So,
yeah, started in the mining retail investment game, so to say. So much that I basically made a second full-time job of it. So I have a full-time job in oil and gas, which I enjoy a lot, but also next to that, finding great mining companies or soon-to-be mining companies. And yeah, I spent a lot of time doing that, really looking for the biggest companies or the biggest miners, but really the sort of under the radar type stocks, but not, and still quality companies. So it's difficult to combine that. And that's what I'm doing sometimes the weekend, sometimes if you count it all up, it's almost a full-time job.
I'm sure, like the level of diligence I see from your work on CEO.ca and on Twitter as well is insane. Like, sometimes I don't even know where you find that information. So that's fantastic. We got to talk about how our investment styles sort of have changed and the impact of COVID-19 on the exploration sector. And David, I'm going to start with you again here as well. Like, how has it changed for you? How is it changing the landscape right now? Has it changed your investment process at all?
It hasn't really, to be honest. In fact, in the past couple of months, I think I've spoken to more management teams than than I did in the 2 or 3 months previous to that. There's been a plethora of online conferences and companies and brokers offering online access to management teams. So, from that point of view, it's not changed our process a great deal. And also, I'm not a geologist. I'm not a mining engineer. So, obviously you can't do site visits, but, other than the fun of meeting the people, I don't add a lot of value by going and looking at rocks or, looking at bits of mining equipment and making a judgment from that point of view. So, to be honest, it hasn't changed our portfolio a great deal, what's happened.
Okay,
and
sorry, go ahead. Sorry, I just cut you off.
Yeah, no, I was always going to say that actually, at the beginning of this COVID process, when there were certain companies that were having to shut down some of their mines, or in some cases all of their mines, I began to, but actually the market's been really kind of indulgent about this. The market's assumed that it's going to be a short-term impact, return to normal, and so when you look at the relative performance of stocks that have had all and those that have had none, I don't see it's been a huge factor in determining stock performance the past couple of months.
Because I think one factor is as well that we're all in the same boat, right? You're in Paris, Luke, you're in the Netherlands, Rob, you're here like a stone's throw away from me, but it's all affected us in the same way, and I think investors even understand that as well. So they're not punishing companies for it. I think it was the CEO of Mako Mining who said, like, you guys can go out and, like, I'm not going to say it out here on the show, but if you sell the stock because I have corona, they had the coronavirus, right? And I don't think it has hurt the company, right? So. We're all in the same boat. That's my point, and I think investors are understanding that, and they see that the mines are operating at a perfect level anyway. Like, not perfect level, but they're going to be operating again the same level. There's a very deep conversation we can have about this. Actually, the mines shutting down because of COVID, because I think maybe 20% of the mines should have shut down anyway, and won't reopen again. But that's a different conversation for a different panel, I think. So, and Rob, like. The corona crisis, you were just in the midst of launching a new company. How has that impacted that process?
Well, in a few different ways. In a positive way, it has allowed me and a couple of my colleagues to review some other opportunities that, since we're at home, we're not spending as much time commuting. We're not going to as many shows to look at a couple of new potential acquisitions for the new company. So being a bit more grounded and having time to go through, a couple of these projects that are coming in to Blackwolf have a lot of historic work. And so it's allowed me to, and the rest of my team, to really be a lot more thorough and come up with, what we think is going to be a lot more robust plan. But as I actually said on a different interview, I think as we come out and we start exploring again, is we're going to see a lot more discoveries because geologists, CEOs, technical people have had more time to look at their data. Like when you're a small junior company and you live and die by the markets, you spend so much time marketing. You often don't have as much time to really thoroughly go through the data. And if you look at after the Great Recession, 2008, 2009 to 2011, there were tons of discoveries. 2002, 2003, after we came out of that nuclear winter, whole bunch of discoveries because you could do more solid desktop review and planning and being a lot more creative because you actually have that. I think over the next 6 to 12 months, you're going to be coming out of it just because geologists have had more time, or engineers have more time to be creative.
Interesting. I like how you're positive about this, and how that's going to affect the industry. So I'm quite curious if you're right or not, because theoretically, yes, groups should have more time, but I'm still of the conviction that they should have used that, like not just used the time, but they should have done their due diligence before drilling anyways. Like that's one of the reasons I like actually Sean Ryan out of the Yukon, because he does that grassroots exploration before he even puts a drill hole on the project, right?
Oh, for sure. Yeah. It's, if you're really doing it properly, of course. But often the reality is like, you got to keep those drills going all the time. And, you got to get out, and the VP explorations have to go out with the CEO to market the company. And I was chatting with my cousin Bruce, who's CEO of Sabina Resources. And, since the office has been closed, their whole engineering team and geologically really revised what their execution plan is going to be, because they all had to come out of the field, all their plans on hold. So it's when you have more time to be focused, good things are going to come out of it. It's we're often really going balls to the walls in this business, and to have a bit of time to reflect at home without distractions is throughout the industry.
No. And Luke, how is the whole situation? And I don't want to talk about Corona in detail, but has it changed your investment style, how you approach things? How has that affected what you're doing? Like Rob mentioned, that companies have more opportunity now to do more due diligence. Does that reflect in your investment decisions to a degree?
Well, it started very different, because what I always try to do with my little nitty-gritty portfolio that I manage, because that's basically what I constantly try to manage the risk and being in companies that I'm comfortable with. And for some lucky reason, in February I got nervous because I had pretty good returns at that point, and I was nervous because a very big portion of my net portfolio, and I decided by end of February to sell 30% of all positions, and options before, but I started buying put options. Only 1% of my portfolio. And two weeks later, options were worth 10 to 15 times more. And my portfolio, of course, was down, but it basically completely saved the portfolio. And 1 week into the big crash, I was basically in my performance. And since then, my portfolio was up by 40%. So I was really lucky, the proceeds of those option trades, to buy Mag Silver, all those good companies, and those doubled and tripled very quickly again. And then I sold them, and I put it into smaller companies, not bad companies, but just a bit smaller, like Orion, Integra, Cartier. Those were still at 7-8 cents for Cartier, for example. Yeah. And those also doubled again. So I've been very lucky, I think, because you shouldn't also overestimate your own one evening. And it was not like a long-term plan that I was working towards. It was just, I didn't feel comfortable with the situation. I saw Corona coming a little bit. It was not the main reason. It was together with a potential PDAC curse. And I said, let's just sell 30% and defend more by buying put options. And that was it was great, because it gave me the cash and the courage, like Rick Rule always says, to do something in this market in mid.
No, having cash, I think, was essential. I personally didn't have any cash, but I didn't pull out any either during the crash. So I'm up now, personally, but I didn't pull out any cash. And I was looking at it, I was like, there's so many companies. Like you mentioned, like Cartier, and they're declined, of course. But like at 8 cents, that would have been a steal. Like that was close to a no-brainer, right, at that point. So, but sure. David, for you as well, like you're running a fund, so you're not trading as actively as Luke, for example, or even as Rob and I can approach the market. The April probably has been a good month for you. Are you seeing also inflows? I'm curious, like what the interest level is from a generalist side, maybe, or investor side now.
We saw some quite good contrarian inflow when gold took that big dip down to 1450. And I think from the low point on the 16th of March, the fund is now up 50%, and we're seeing in the last week, outflows of guys who were smart enough to buy at the low actually locking in. So I don't think it's because they're bearish. It's just they've just made a lot of money in a very short time, so they're taking some off the table.
Yeah, nothing wrong with taking money off the table there, and nobody's ever lost money by taking gains off the table, right? So isn't that the saying? So we're all like David. I'm not sure about you, but we're all not macroeconomists. Like we live and die by the gold price, but none of us can influence it in any shape or form, right? So what I want to talk more about, like, is more of the rise of the gold price in recent weeks and months. Has it been too fast for our sector? Are we still catching up? And what does it mean for us, right? And Rob, I'd love to get your input on it because you're looking at a copper gold project, and of course you're an investor in the sector as well. What is your opinion on the rise of the gold price? Has it been too fast, or like what's your take on that?
You want me to go?
Yeah.
So, well, markets have opened up. I participated in a couple of PPs. Launching the new company. It's for deals. And has the price gone up too fast? Again, I'm not a macro guy, but the amount of money that they're printing is unprecedented. And maybe we've got a nice bounce here in the market. Unemployment and some countries that are in just terrible states like Brazil. There could be another waterfall down. So at time, I wonder if we should be like Luke back in February and maybe taking some profits here too.
Yeah, I was actually thinking that because of some stocks I'm quite overexposed in right now, and I was like, is it now the time, right? But Luke, like from your perspective, looking at the gold price, we fairly quickly ran from 1450 to 1750. Like one thing is, like, I like to invest in quality as you do as well. I'm not a stock or penny flipper here. Has it risen too fast for our sector to catch up for the quality names, or like what's your take on that?
Well, if you take all the emotion out, then actually we didn't move that much. Of course, we moved a lot from the bottom to, but if you go back to February and you take those valuations, I think a lot of companies are just back where they came from. Maybe a little bit higher, but not even that much higher. So I don't think the companies are necessarily very expensive right now. So I think it's difficult because I prefer to be an investor and not to stop trading again and think like a trader, because you start doing that in this type of market. And so I think there's still room to go for all these better companies for sure. It's just it's a nervous market. I mean, at the moment it feels all good, but that makes me a bit more nervous again, because at what point will we turn around? Because we will ultimately. Will it be this year or this month or next year? I have no idea. So we have to work with different scenarios and at some point take something out of the market, I think. And at the moment, I'm pretty fully invested, and it makes me nervous again. And I need to think about how to deal with it. How do I protect my portfolio in this case? But yeah, invest in the better companies, the ones that I know and I understand, and I don't have to think about if they are spending money on the wrong things. So yeah, I think it's still. I don't want to comment too much on the gold price because I have no idea. Yeah. I hope everybody is right and it will go to $2,000, not $10,000 hopefully. But I have no idea. I just try to stick to the better companies and also consider the downside. Consider that there's a possibility that things turn again. But at the moment, I think we have still a bit of runway to go. That's just my personal feeling. But take it with a grain of salt.
No, I think I'm with you here as well. It's like I am worried about a bit of a second wave here of Corona just hitting the markets again, because people are, especially in the main indices, are quite skittish about what's going on. And I'm not sure if Q2 and maybe even Q3 numbers have been priced in the share prices yet. And based on how they've been running, it doesn't look like it, right? David, like, you're also really active on Twitter, and knowing from my personal perception, I have a bit of FOMO as well. Looking at what's going on and like people posting all their wins and I was like, why didn't I participate in that stock? I heard of it before. Why didn't I buy it? And you're running a fund. How hard is it for you going on Twitter and seeing everybody posting all their gains, and you're fairly limited on that?
Yeah, well, obviously, and in Europe we have pretty stringent compliance. So, I can't go on Twitter and pump my favorite picks. But to get back to your question about whether it's overdone or not, I think when you're running a fund, that your investors are in there to get an exposure to gold mining and a leverage effect on the gold price. So, if I get bearish on gold, I put 30% of the fund in cash, and we wake up the next day and gold's 2,000, then I have a job, right? So I tend to be fairly fully invested. What I do is, there are different styles within the sector. There are deep value stocks which have got bad operating histories, and there are growth stocks which tend to do well, even if gold comes down. So I switch around the allocation between companies with different characteristics to what's going. And at the moment, I'd say in our larger holdings, we have a real kind of value bias. So we're really looking for in the larger cap part of the portfolio, stocks that are still trading at a discount to price to net asset value, and there are still a surprising number of them around.
Do you mind mentioning a couple of your bigger names? I think they're mentioned on the fact sheet anyway, so your larger positions. Yeah, I mean, recently, 3 or 4 weeks ago, took a position in Oceania, which has got this big problem in the Philippines overhanging it. But I just think the Philippines asset got completely priced out. I see that happen from time to time. The market kind of prices a negative for an asset which is no longer operating. And even taking the DDPO, the Philippines asset out, on our numbers, it was trading at about 0.4 times PNAV, and that just looked too good an opportunity to pass up, particularly as the others, there's Hale in the US, and there's 2 mines in New Zealand. They're tier 1 jurisdictions. Hale's got a new operating team which has come in from the Barrick Nevada operations, and they're turning it around. So it just looked a really strong value story. It's done quite well since, but I still think it looks very cheap. No, good points, actually, because I think the gold price sort of helps lift all boats, but I think we're at that point now where there's still a lot of value plays that you can pick out, because a lot of stocks that, as Luke said, ran already. They are maybe up 100% already from the low, or even 200-300%. Some stocks have just ran up like crazy. Is it, Rob, a question for you as well, is it now time to be more of a stock picker again than a general market player?
Well, that's typically how I invest. Either, when I come in, usually based on honestly, either a nice anomaly. Like, for example, a couple of years ago, I was one of the first to pump GT Gold, to be honest, because I'd never seen a soil anomaly like that. And Charlie Grin, and I was like, I only bought 40,000 shares of it, and it turned out to be a great win. So, and I try to stay disciplined with for example, Premier Gold has a joint venture with Barrick in Nevada, and this is about a year ago. They pulled this 120 meter and a bit grams per ton in between the McCoy and the Cove mine in a new carbonate host rock, and that's in the Battle Mountain Trend, where a bunch of bear monsters are, Gold Rush and these others. So I've been long Premier Gold since then, because I think to another one of these big Northern Nevada sediment hosted monster deposits. Or last year I bought Libero copper. They have a project in Northwest BC. Very, very nice surface numbers. They tried to drill it last fall and they got snowed up. So those are usually the stories that, hey, there's going to be a catalyst. They're testing something. That's usually the that I pick. Or if I'm trying to get flow through, I'll even if I'm not a huge fan of the property, but I think it's good value, I'll buy some of that stuff.
Oh, that's an interesting aspect you're raising there, flow through and buying crappy companies because of the tax advantage. That's interesting.
Well, yeah, sometimes you'll hold your nose, and but it's at a good price, and promoter behind the story that it's going to get pumped pretty good during the summer. So that still happens. Don't as you
flow through is a completely different topic again, and I think, David, you can't invest in it. Luke, you can't invest in it either. So we're going to skip that topic for today. But I think flow through and crappy companies raising flow through and people investing just because of the tax advantage, I think that's a major issue in my opinion. But
there's lots of good companies too.
Oh yeah. But
through, of course.
Yeah, but you raised the point of something that it's like you want to hold your nose at too, right? So it's like, just buy it for the tax advantage. And it's like we ran the numbers at Orning for PDAC, and some of the companies are raising flow through at a negative discount or at a negative premium at a discount, and that is just wrong to me. So that just doesn't work. And Rob, it's like we're going to stay on you. It's like we're going to give you a couple more minutes of airtime here. But and Luke raised an interesting question before we started recording here. Is like, do you as a geologist have an unfair advantage in our sector? And like, how do you use it? Maybe Luke, you should ask that question because you raised it. Is I'll let you ask it actually, Luke.
Well, the question is. Every day you see drill results, and sometimes for me as not a geo, it's quite easy to understand if it is significant or not. I cannot completely analyze a geo, but sometimes it's obvious enough. Like Mariana with Hot Maiden, they had this crazy discovery, and if you can find out this is not a twin, and you have a good start, and you can just take that risk to buy something. This week there was Melchior Resources, I think, and they have been drilling high-grade gold for 10 years, I think. And they came up with some interesting gold results, and you wonder, is this just another one of those 100 drill results that they already do for 10 years? Is this just something? Or is this real? And I couldn't answer the question, and I couldn't find anyone to answer the question. And now Kirkland is investing in them. So it's probably, but sometimes how to find out, especially if it's not an obvious discovery, but a potential discovery, what's the best way for a non-geo to find out, is this real? Because also the newsletter writers, they will not be able to answer your question within 5 minutes, but sometimes you want to make a decision within 5 minutes because the stock will trade in an hour from now, and then you need to buy something if you want to be early. That's the question.
Often it's, to be honest, I've missed out on so many opportunities because I'm a geologist and I can look at maybe some of the results that have come out and said, this is a piece of crap, and or this has got zero chance, and the stock goes up and up and up, and usually it's for like, say different, like when rare earths was the big thing, or a lot of the different energy metal stories that are just absolutely launching. Because I'm like, this isn't going to really work out. Just some of the good ones, like I mentioned GT Gold, or Melchior. You mentioned, is that something they've been out there drilling for 10 years? They're in that Abitibi belt near Timmins. Well, this is one of the, not only for gold but for platinum and zinc, and it's a mineral belt, and so you can. So many discoveries that have been made recently, or Great Bear in Red Lake. These are older properties that have been tested many times before, but you get a new set of eyes. You get a bunch on some of the chat rooms. They were saying Melchior could be the rumor around Timmins. There's something special. Maybe it's another Kid Creek, and they put out in the press release precious metal enriched. Potential volcanogenic massive sulfide. So take a look at it. Hey, they're in a great mineral belt. They've got some good grades. Maybe that is. I haven't bought any. It's certainly the stock moved, but it is something to pay attention to. But probably the unfair advantage gets. Hey, if I was had the guts to short companies, often that's where being a geologist might be more of an advantage because that what they're dealing with fantasy projects.
No, that's good point. You're often your own worst enemy, right? And maybe knowing too much in our sectors isn't always helpful.
Yeah, that's right. Like one of my now this is way back, like to the late '90s. I bought mining. They had it was up in Alaska. It was a project that actually I knew, and I bought all sorts of stock based on that one. And they drilled out there, went out, drilled a bunch of dusters, and then they acquired a whole bunch of mines in Sudbury just before the nickel price took off. So sometimes it can be a little bit serendipitous. Often buying stocks for geological reasons. Generally, just like most exploration properties, they don't work out. I have a couple that work out really, really well.
David, what are some of your criteria? You said you're not a geologist, you're not an engineer. What's like, besides the obvious reason people, like what's the, let's say, number 2, number 3 reason for you to look at a stock or even consider investing in it?
Well, I'm a financial analyst by background, so I do tend to look. I do tend to look carefully at the financials. I mean, mining is a very operated business, right? So you've got relatively fixed costs and a top line which zings around all over the place, depending on what commodity prices are doing, and you've got no control over that. So there's already a lot of leverage in the business itself. So I tend to look for companies which have little or no debt, because I think when the gold price goes south, which it does sometimes, as you remember from 2011 to 20, if you've got negative operating leverage in your business and debt, that's an accelerated path to a whole load of trouble, right? So like companies with no debt. We also, it's controversial, but we like companies with relatively low extraction costs, and in a bull less leverage, right? But so if you've got a company with costs I don't know, price goes from 1,200 to 1,300, you double your operating margin, right? If your costs are 800, then your operating margin goes up by 50. So a lot of people in a bull market, they look for the high operating cost, maximum of leverage, and we try and resist because what history has shown is that actually the side is great, but the leverage on the downside is bigger. So if you're investing across the cycle, what you don't want is in the downside go bust and you're out of the game. So we're often prepared to sacrifice a little leverage in the bull market to stay in the game in the bear market. And that's led us to have a big allocation to a lot of we're very overweight Australia, where most of the operating companies, have AISCs in the US dollar range, and they have net cash balance sheets, and they pay dividends along the way. So that's kind of the core of our portfolio. And we mess around a bit at the edges.
Yeah. Now, since you mentioned they all got net cash on the balance sheet, do you like the SSR and LSR merger?
I was one of the guys who bought SSR because I like the really solid track record of actually meeting guidance, of doing what they. It was a big position for us, one of the biggest positions in our fund, and I woke up and found that 50, 45%, whatever the NAV was suddenly in, which is to be honest is a jurisdiction which I've avoided up to now. Our shares we're holding on. I think from a financial point of view, it looks like a good deal. There's lots of cash flow growth coming from Alaska. There's plenty of cash flow, so it looks good. It looks good. We've just got to get comfortable with the Turkish risk, and I think that's not an political kind of risk, because Turkey's in a whole bunch of trouble as a state, you know. So yeah, we're still thinking.
Yeah, no, I had a chat with Paul Benson the other day as well, and I told him like my first reaction was like Turkey, right? But the numbers on the balance sheet they look great for both companies. So we'll see how it goes. But the political risk, if you don't feel comfortable, I can fully understand that. I'm there with you. So look, I think one of the questions everybody's asking and wondering, like, how do you select your companies? Okay, you're on a very deep due diligence process, but how do you even come up with the ideas? Because sometimes you comment on names that I've never even heard of, and like, they're absolutely unknowns. They're small companies. They're doing some drilling. Maybe they have even some old dusty management teams or something. But you come up with some great picks that are completely on nobody's radar. How do you do it? Like, run us a bit through your process. I'm curious, and I'm sure some of our readers, listeners, viewers want to hear that as well.
Yeah, there's not one process, but of course there are a number of things that I do. I really find it important to every week, and I mostly do that on Saturday mornings, go to Stockwatch and look at all the which other people do not read, or maybe even management circulars. And sometimes you spend hours and hours and hours reading until you find something that interests you. So, but that's of course a different game than most looking for the smaller type investments that really can make a 10-bagger potentially, or 5-bagger or 20-bagger, whatever. And I call it almost special about a shell that's just being started, and you see that the right people are being placed. And even though I don't know anyone around it, it is a possibility. But buying shell is high risk. I would not recommend anyone to do that. But sometimes you just find something and you're pretty sure something will happen. Sometimes, Cartier is one of the few stocks that I bought after a presentation. I'm almost never buying something after a presentation online, but the presentation was convincing, and also their secondary projects, or their not the flagships. And there's so many different ways to get to a company. What I for sure like is the companies that are trying to avoid warrants. If you're a company and you can avoid warrants, then you almost always already have a good team, because not many people can do it. Raise at 5 cents or 10 cents without warrants, or preferably the first raise at 20 or 30 cents without warrants. You almost never see a bad company. Almost any company would raise at 5 cents with a full warrant at 7. And it's really nice if you have a big discovery, but without it, you will never get through the wall of warrants. So I want to have a clean structure, company people, or at least understand that they are good and serious. And it's the same criteria other people have, that I may spend a bit more time on it, or maybe I'm willing to buy something that's completely boring, that is just flatlining already for 3 or 4 years, but you know that there's a good project in there and can simply not be drilled for some reason. And you just buy it, you pick up all the shares at 3 or 4 cents, you wait it out until that moment comes that they can drill it again, and only that drill news would already triple the stock. And of course, it's not the only type of play I'm in. I'm not only buying. Those are often the big opportunities where you put in very early and you just let it sit there and wait and investigate. And if you keep on liking it, if you're not finding a red flag or something, then you can just sit there and wait. And you don't really care if it goes to 3 cents or 2 cents. You just buy a bit more, and it will not always work for you, but if it works, then it can become a 10, 20 bagger without even so much great news. And if they make a real discovery, of course, which doesn't often happen, then of course it can be much more than that.
Interesting. Yeah, no, Stockwatch Friday afternoon, Friday evening, or Saturday morning press releases are always interesting. But that's where you find the hidden gems. That's true. And we discussed that, I think, numerous times on other platforms and forums and stuff as well. Oh, it's interesting.
I think one more thing. It's I think something that Tommy Humphrey said in his podcast half a year ago. I think you want to really know the landscape very well. You want to see every deal that happens. You want to see every one of them, and you should just understand a little bit of each of them. You don't have to buy each of them, but you just want to know, okay, there is a new company created and another one and another one. And if you just know what sort of landscape you have, what sort of deals, what sort of people, at a certain point you get a good feel for what works and what's not going to work, even without knowing the company already. And if you finally have that pick, the 5 companies you like, then you can start calling and investigating. But if you know all the deals that are playing at the moment or are trying to start up, then at least you have a good feel for what's there, and you can make a pretty good assessment about the ones that are real.
Yeah. No, it's like, I'd love to. Like, if somebody can show me a software where you can actually connect all the dots and all the people who've been in what and like who knows who and all that stuff. Like, Rob, you're the obvious example here. You and your cousin, like, you share the same last name, so it's quite obvious, right? But those connections are very obvious, like often hidden also in the industry, where somebody knows the VPX of Franco-Nevada and you figure out, oh, that's where that person gets all the information from, right? Or that's where the expertise is coming from, right? So that's quite interesting. You mentioned something, Luke, as well, like buying off presentations, and now it's like we're in unprecedented times, and we've been talking now for 40 minutes. So this is sort of my last question for you guys: is really, how are you moving forward picking companies? Like what we're doing now wasn't possible, or it was possible, but nobody's done it. Like live Twitter, live presentations, webinars, virtual conferences. How are you using that, David, for your investment process, maybe?
What, using conferences?
Like the format change. Like I think I saw you in Zurich before.
No,
right?
We're doing a ton. We're doing a ton of. There was the one-to-one conference, which was supposed to be in London this week, was cancelled, but it all happened over Zoom. So in the past 3 days, I've had 25 meetings with companies over Zoom. They've had their presentation there, their whole team. They may be in Perth, they may be in Vancouver, or whatever, but it works pretty seamlessly. And touch of having a few beers with the guys, but from point of view of gathering information, it's pretty efficient.
No, good point. And Rob, like, let's say you're launching the new company. What kind of avenues are you taking? Have you thought about that yet?
It's going to be reaching out. Like COVID is going to completely change, or it has already, how we market, and so we don't necessarily have to go to London as much. We can do these type of presentations. It will be that personal touch, but absolutely, it's going to be through video conference. And you know what? You look at some of the companies that have been really, they've been doing. They're active in social media, or their executives are. You take Doug Ramshaw with Monera Alamos, and some of the other companies that he's been involved with are great. Is you have a guy that is always there that can he's not overly promotional, or Brandon with Harweed Zinc, are help explain the culture of their company, are always there to answer investors' questions. So being active both from a company or maybe from a CEO account in social media is really important. And you meet so many great investors as well too. Follow or buy some of their recommendations, and just when you're trying to hook up with them about some of the other influential mining Fintwitters. Like I bought Adriatic based off Pamplona Trader, who does like tremendous amount of due diligence, and there's a lot of really good people out there too. If you see collectively there's a buzz about a company, those stocks start going on the right direction. Or Alex Black with Rio 2, are out there as well too. You put your neck. There's guys that don't like you or don't like the story, or if you go down, you're more open to online criticism. But hey, those guys that are men and women that are doing it, that's it's awesome. That's the way things are going to go in this business.
No, good point. And David, we're all really active on Twitter, and that's why I'm really appreciative that everybody is on here giving their input. Luke, like, are you using? Has your how do I phrase that question? But has your intake changed of information, or you've always been online working from the Netherlands? Like, are you using any other channels that you haven't used before? Like, are you getting more active on a platform that you just discarded before?
Well, I'm not only working from home. I've been to Canada a number of times, like probably 10 or 15 times in 5-6 years. So I do go to the shows, not now, of course. Well, Twitter, at the moment there are more people on Twitter who this. I mean, Pamplona is a good example. I bought Adriatic of his. He found it, and it's a great 6-bagger or 7-bagger so far. And Stockwatch, it's CEO, it's Twitter, it's those are the to reach out to people at least. And no, I don't have other ways to find information. I think, of course, being in contact with companies. I mean, if you know companies very well, you should just call them every now and then and going on. Because if you only check online, you never get the context. And I think it's important to talk to the companies. And even as a retail investor and in small companies, they will take the time for you to explain things. And that helps a lot, I think.
Now, how important is it for the companies to be on social media like this? Like, Rob mentioned some great examples that are really active. But like it's a big time commitment. I know how much time this takes for me personally to manage our Twitter account. Companies have to run the capital markets side. They have to run exploration programs. Like how present do you want them online?
Yeah, I don't know if Twitter and all those. I think it helps for exposure. Personally, I think important for a company to have the right shareholder group, and that's often high net worth investors who can help you forward in more difficult times when you need to raise, but it's difficult. I think it helps to inform people also on Twitter. There are good people on Twitter as well, but I think it's even more important to be in the right groups as a company and the right people who can finance you, but also finance you again in tough times. And I don't think you can do that through Twitter, and you need to really have the right. That's why I think so little people ultimately make it in this business, real, like becoming a new Ross Beatty or I think those people have a network and they can raise at very low cost of capital. And I think it helps to promote online and to get exposure online. But I think in the mixed groups and getting finance at good prices.
No, excellent points you raised there. And David, I'm just curious because you're active on Twitter. You're a fund manager. You can't promote your own stocks, but like, what kind of what do you take out of Twitter? What's the feedback you get, or what do you take away from it on a daily basis?
I think what I get out of it really. I follow a lot of people who are not in mining, so helps me get some context on what's going on in the markets, what's going on politically in some countries that I've got on my kind of watch list, and also just to get people's opinions on stocks, potential ideas, stocks that I hold, that people hate or love, just try and see the other sometimes. Sometimes you'll be looking at something, you followed it, you're thinking of buying it, and then somebody puts a very succinct argument about why it's a great thing to do, and that can be a trigger. So it's useful. It's certainly useful. Part of my process.
And Luke, we got a question on Twitter for you. Are you going to start a paid for newsletter sometime?
No. I had a website. It was not a paid website, but just a website where I covered some stocks. But I figured that I can also do that on Twitter or on CEO, and I'm not just doing it to get attention myself, things and to get people to comment on things. And no, I'm not going to do any paid newsletter type thing.
No, straight answer. Nope, ruled out. Okay, we're at 49 minutes, so I really want to wrap this up a little bit, and we've had some great conversations about what the market has done and what the junior exploration scene has done. Like, how do you I'm going to start with you, David, because you're at the top on my left. I don't know if people look at it, you're on my top right, clockwise. But what are the next steps? For you, for IXIOS as well. But where do you see the market going for the next 3 months to sort of put a bow around what we discussed? Like, how are you allocating funds maybe differently or something?
we don't vary too much from our process. I think what has happened over the past probably 6 weeks is that we've increased the allocation to the smaller end of the market. Those things got really, really cheap in March, and I think we're moving into a second kind of phase of the bull market for gold stocks, because in the first phase, the developers and the junior producers didn't really participate, and they're really starting to get into gear now. And even if the gold price can just hold up somewhere around here, I think there's just some fantastic value, smaller producers, and even the ones that have come up a lot, right? Even the ones that have doubled or trebled. When you're looking at the cash they're going to generate at 1,700 gold, a lot of them still look very cheap.
One company comes to mind. I hope you don't mind me throwing it in there, but I met with Fiore Gold during 1-to-1 this week. I think that's one of them, a smaller producer, but I think they're going to be printing cash at this level. So just as an example, I think to your point, I think that might fit in there. So
we are we're getting a bit more adventurous, probably a bad sign, but we're buying more smaller companies, so we're really trying to benefit from that. And I think when you look at the valuations of, say, Barrick or Newmont today, there's less upside. They've closed a good gap.
No, those are some great comments. It's trickling down, and that's what we're seeing at Oren Inc. as well. We see more smaller deals open in terms of financing. So quite excited to hear you say that as well as an institutional investor as well. Mm-hmm. So that's good to hear. Rob, we're coming up to the summer months. It's May 22nd today. Typically the summer is slower, but this year I have a feeling nobody's traveling anyway. I don't think it's going to slow down much. What's your opinion, and how are you positioning yourself and the company for the next 6 months or 3 to 6 months?
Well, companies are getting prepared depending on the different jurisdiction, but say in most of the Canadian provinces or territories, there's either procedures in place or mining and exploration has recently, the explorers are going to mobilize to their programs. I think we're going to see a lot of amateur. There's been a bit of smaller or producers, but you'll see site visits you'd mentioned in some of our early, you can't do them. Now you probably can. You can get a consultant to come out. So I think you're going to see some of the more developers and stuff get snatched up, but I think it's going to be a really summer, and particularly for some of the base metal commodities as well too. Usually it's some of the base metals that lead economic recoveries. Maybe it'll be into the third or fourth quarter, but you're seeing copper and zinc creep up a little bit. So I think we're going to have a maybe down in the broader market, but I think it's going to be really good for juniors over the rest of 2020 here, or because of COVID.
No, and Luke, how anything do you see anything changing from your style of investment over the next 3 to 6 months, and also over the summer?
No, not really. I think I will stick to the names I have. I'm not rushing into a lot of new things. I'm just doing a couple of private placements, or at least one at the moment. And but I'm cautious because you are locked up in, because I'm a long-term investor anyway. But I do not rule out that we get another crash. I don't think very soon, but maybe in the next months. And I don't want to be locked up in 4-month holds. So I will just stick to my core positions, and if I find something new, I will try to take the opportunity. I think.
Good points. I actually shied away from a couple investment or financings as well. So 4 months right now, I just can't stomach it. It's just a little too high risk. Because if there's a second wave, and I'm looking at the US here primarily, if there's a second wave of COVID, we don't know if there's going to be another liquidity crunch, right? Okay, I've said my piece. David, Rob, Luke, thank you so much for joining us. This has been a super informative session. I'm sure our audience got something out of this. Everybody made some fantastic points, summarizing what the market has been and where it's going. Wayne Gretzky said you got to go skate where the puck is going to be, not where it is. And I think we made some great comments in that regard. And I really appreciate you taking the time. David, Luke, you're in Europe. So for you, it's already 8 o'clock in the evening. So I hope you have a great weekend. It's not a long weekend like in the US. You had your holiday, I think, yesterday in the Netherlands and France as well.
Yeah.
Right? So,
Yep.
and Rob, great weekend to you as well. And I really appreciate everybody's time. So, and thanks for the questions, everybody. Thanks for tuning in. Make sure you follow us here on Twitter. Make sure to subscribe to our YouTube channel as well. Give us a thumbs up if you like our content, and also make sure you turn on the bell and alerts. That way you always get notified when we go public or live with a new interview. Thank you so much.